Welcome everyone to the CFO Swinger Watch Report technical analysis video for the trading week of March 10th through 14th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance and navigation in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. So, make sure to join us if that is something that truly aligns to your trading goals. Take a look down at the description box down below to start that trading journey with us. With that, let's get into the markets. So, last week was pretty much the same as the previous week. It was simply a textbook downtrend. Now, there were two pivot points that I was looking at for the price to hold, specifically this lower pivot point compared to this lower pivot point right here on February 28th. And the reason why is that, well, these two pivot points made this ascending support trend line. And if the price was able to uphold this trend line, then we could possibly have a continued bounce to the upside as we had seen on February 28th. But unfortunately, even though we did end up opening up over February 28th's high of the day, we continued to move down after a hard rejection at this daily 50 SMA. So ultimately, we just continued to move down. So the underlying trend right now is a downtrend, right? From a technical perspective, we are in a downtrend. And if someone tells you otherwise, well, they're wrong, right? We are in a textbook downtrend with lower lows and lower highs. And officially, we have made a new lower low last Friday compared to this previous lower low pivot point. All right. Now, here is where things can get very interesting for this week. So based on the seasonal patterns, the seasonality trends that I've talked about already last week, and in this week's market summary, we should be seeing a possible positive trading week, or at least a positive return in this trading week alone. But also on a technical perspective, we have come back down to retest this rising daily 200 SMA. And if you guys forgot, we have not retested this daily 200 SMA since we bottomed out in October of 2023. And if you guys remember, I correctly timed that correctional move to the downside for most of the summer months, all the way up into the actual pivot day and the actual bounce day from the transition from October to November of 2023. And so this was kind of the last time, well, it was the last time since the price retested and came back over this daily 200 SMA. So now that we've come back to this daily 200 SMA, there should be some long-term buyers who are trying their best to have this area, this SMA support area, as a line of defense, a line in the sand type of defense. And this comes as the price continues to kind of consolidate. It's not really consolidating, but from an intraday perspective, the price continues to retest this 574.50 level. Now, if you guys remember, I gave you guys three different downside targets here. The first one was 600, the second one was 585, and then the third one was 574.50, or if you guys just want to simply round up, 575. And so now that the price has hit all of these three downside targets that I provided, it would seem appropriate for the markets to literally come back and retest these previous downside targets as a new level of resistance, right? Because all of these downside targets were major levels of support. And obviously we continue to break these significant levels of support and areas of demand, and just absolutely began to crater to the downside. And so with this caving in of the price, it would seem appropriate from where we are at now, including this level of current support at 574.50, for the prices to actually pivot and come back to the upside and have a nice reversal price trend for this week. So for me, I would say from a conservative perspective, we should be seeing a retest of 585 as the highs of this week. But if you want to be as open to the possibilities of a potential reversal, I would say at least a retest of 592 could be fine. But if you want to go even further out, if you think that we could possibly have a potential V-shaped recovery, then $600 is your best bet for maximum price target for a potential reversal. Now, I do want to point out that this pullback is really reminding me of August, right? I've been talking about August last year when we had that complete debacle in the markets from the yen carryover trade. And I've been talking about August in relation to the VIX, right? The volatility index of the S&P 500. And so far, this correctional move down in August closely resembles this pullback that we're seeing now, this correctional move. And to me, if we do see a potential reversal this week, we could potentially also see a very similar recovery move back to the upside as we saw in August. But then again, the current market conditions, and even just from an economic perspective and how the markets are reacting to multiple economic reports, we may not see that, obviously, but we can still see a potential expectation for that, which can drive prices to the upside and ultimately give us that maximum retest of that $600. Now, obviously, again, we're still in a downtrend. Even if we decide to come back up over to 585 this week, or even if we come back to 592. Again, the selling volume that we're seeing here now as we continue to pull back in is heavy, right? This is confirming that we are in a downtrend. So we need to wait to see an official retest of these major previous support levels. And if they become major levels of resistances, we will for sure see a rejection at the significant previous levels of support, but now a new level of resistance. Okay, and this will only happen again if the price comes up and actually retests these previous levels of support, turning it into a new level of resistance if the price rejects at these levels. All right, so make sure you guys have these levels on your daily time frame for SPY. Now, for the first and only swing trade idea for this week, okay, it's not FCX, but I gave you guys a small hint as to what our other names are in the report. But it is LMND. So this is our first and only swing trade idea for this week. So I give you guys a complete fundamental and even further technical breakdown on this name, along with the 3-point game plan with all the entries, all the price targets, and all the recommended stop losses in the actual report. So make sure you guys read the report first before you watch this technical analysis video. And on top of that, I've given you guys the exact option contracts we need to be looking to trade with in the report as well. So again, please read the report before you watch this technical analysis video. All right, so LMND, first of all, if you take a look at this from the monthly perspective, I mean, let me just clear out all my lines here. This one has been on a massive squeeze run, and this has occurred after 2+ years of solid consolidation at all-time lows. So obviously, that's not a good sign since the price is sitting at all-time lows, but when we have such a good lengthy base where the price has continued to hold significant ranges, even if it's at all-time lows, there's a good chance that the price can ultimately squeeze to the upside, taking out all the short sellers who were late during this entire consolidation of 2 years, and maybe even late to this entire run to the downside to all-time lows. And so all these shorts got squeezed from October to November of last year. So as long as the price continues to consolidate this entire 2-month squeeze that it experienced last year, we should be able to see a potential second leg up higher. And that's where this week's trading week comes in, because based on the short interest percentage that I provided for you guys in the report as well, there is a good chance that this one can see another short squeeze like momentum breakout to the upside. And Lemonade on the daily time frame, due to its current consolidation for the last around 2.5 months or so, or at least 3 months now, it has made a very nice macro wedge chart pattern. Now, mind you, wedge chart patterns are a neutral chart pattern, and they do tend to give us two different ways to trade the chart pattern, either a breakout to the upside or a breakout to the downside. However, this is a pattern that tends to trick both buyers and sellers, and so you need to be really careful with this name as it continues to conform to the parameters set up by this wedge chart pattern. Hence the stop losses that I've given to you guys in the report itself. So please make sure to read the 3-point game plan that I have provided for you all in the report itself. So now I want to hone in on the trading action, the price action here for the last couple of trading days here. So all of last week, the price has continued to basically kind of move sideways between 32.20-ish to around 38.05-ish. And this has occurred after it was able to fill in that gap, that initial gap down that it had from the earnings report reaction. And ultimately, it continued to rise up higher and higher until it has gone right back to the previous ranges that it had before the earnings reactionary move. So to me, this simply states that there is a good amount of relative strength in this name. And if you just take a look at the RS, right, the RSI here, the values are ranging at a very ideal, it's a very ideal range of around 40 to 60 with the midpoint around 50, right? And right now, the RSI is sitting at 52.30, so it's ripe for a potential big breakout to the upside and potentially an increase in the RSI back towards overbought levels, which again does not mean that we'll be seeing a massive rejection down, but it could just simply mean that there is an overwhelming amount of buyers compared to sellers. All right. So with LMND, I really want to see a good breakout over this current range, over this horizontal levels here of 38.05, and obviously the price is continuously holding up over 32.20, and eventually if we're able to get past this descending resistance trend line that makes up this wedge chart pattern, we need to see an actual breakout over this wedge, so out of this descending trend line and over this major level of resistance at 40.50, so a whole number level of resistance at 40.50, and so hence that is the reason why I've given you guys these long entry points, right? 38.10 or over 40.55. Now, if you do see the price breaking over 40.55, you still need to be cautious of the price potentially being smacked right back down, because again, there's a lot of short interest overhead, right? And there's a lot of overhead supply that we need to be aware of, especially when you take a look again at that monthly time frame here. Right, there's a lot of overhead supply, which means there's going to be a lot of short sellers that are actively trying to slap down the price every single time it tries to attempt at a breakout. All right. So be careful with this name, and that is it. All right, so this technical analysis video was insightful and most importantly, applicable. Make sure you smash that like button down below, and if you are new here and aren't subscribed to the channel, make sure you hit that subscribe button as well. But also, if you're watching this video when it just became public and you want to watch this video a day earlier when it's private, all you need to do is become one of the many readers of the CFO Swinger Watch Report, which will also automatically give you full access to the private CFO Discord community where you can expedite and further your learning in trading. Again, you can find all the details down below in the description box. Alright, if you have any questions though, please DM me on Instagram at ChartsFocus1. Again, my handle is at ChartsFocus1. Good luck, and I'll see you all tomorrow morning.